Hello everybody, hi, this is Manisha Rakhicha and today my topic is insurance. Now, supplies of insurance and related services can be either standard rated, supplier must charge VAT at 5% and can recover all input tax incurred in making those supplies. Now, this is good, you can recover that. This will apply to most types of insurance and is the default position. Now, some are zero rated. Supplier must charge VAT at 0% and can recover all input tax incurred in making those supplies. This will apply in certain specific circumstances. Exempt. Supplier must not charge VAT and is not able to recover any VAT because there is no VAT. VAT incurred in making exempt supplies is a cost to the supplier but may be built into the price charged to the customer. Exemption will be very limited in its application in exempt things. Commercial decision to be made, remargins and passing on VAT cost when making exempt supplies. It has to be decided commercially. Supplies of insurance and insurance related services will be subject to VAT at the standard rate of 5%. They are treated as taxable supplies. The supply of insurance or reinsurance services to a recipient established outside the GCC, whether or not they would otherwise have been exempt, were supplied in the GCC, will be zero rated. It is outside the GCC. In addition, the supply of insurance or the arranging of insurance relating to the international transport of goods or passengers is also subject to VAT at the rate of 0%. Exemption from VAT is defined by exception and will be limited in scope. Life insurance and reinsurance are exempt from VAT. It is exempt. Life insurance contract means a contract lawfully entered into to the extent that it places a sum or sums at risk upon the contingency of the termination or continuation of human life, marriage, similar relationships permitted under applicable law, or the birth of a child. The provision or transfer of ownership of a life insurance contract or the provision of reinsurance in respect of any such contract shall be exempt. Islamic insurance. Subject to the agreement of the FTA, and any supply made under an Islamic insurance contract shall be treated in such way as to give an outcome for the purposes of the law comparable to that which would be the cases for its non-Islamic counterparts. An Islamic insurance arrangement means a written contract which relates to a supply of insurance in accordance with the principle of Sharia. This is to ensure the equivalence of VAT treatment between Islamic and non-Islamic insurance products. In determining the correct VAT treatment for Islamic insurance products, the purpose of the Islamic product will be considered. If certain aspects of Islamic insurance may preclude direct equivalence in VAT treatment being applied, the underlying purpose, features and circumstances of the product concerned must be taken into account when determining the appropriate VAT treatment. So there is no difference, and they have not created any difference for that. Any significant difference in the overall liability between an Islamic insurance product and any non-Islamic counterpart arising as a consequence of differential treatment being applied will be addressed on a product-by-product basis. Providers of particularly complex or non-standard Islamic insurance product should seek a determination as to the VAT liability from the FTA. Composite supplies. A single individual supply of a mixture of goods or services to which a single rate of tax applies. It will be a different types of goods or services to which a single rate of tax will apply. This can apply to insurance services which may be packaged or bundled together where they would ordinarily be treated as separate services. Apportionment must not be used where a composite supply is made of two services with different VAT liabilities. There is a single supply where one or more elements of the supply comprise the principal component, with other elements being ancillary. That is not an aim in itself but a means of better enjoying the principal amount. The contractual nature of and the wider circumstances of such supplies will be taken into account. There is supply which has two or more elements which are so closely linked that they form a single supply and which it would be artificial and impossible to split. Charging a single price is not determinate but may suggest that there is a single service. However, where there are indications that the recipient intended to buy two distinct services with different VAT liabilities, this could mean that the single price should be apportioned between the two. For examples, policies which contain incidental life insurance will be treated as liable to VAT at the standard rate. The provision of health insurance will be liable to VAT. Now, provision is liable at the standard rate, but where there is provided by an employer to an employee as a benefit as part of the contract of employment, the employer will be able to recover the input tax on such product, subject to the usual rules of recovery. Now, this can help you in your tax planning, Mr. Employers. You can do that. Real estate insurance, in line with the place of supply rules, the location of risk will be where the property is situated. Where insurance providers make a mixture of taxable and exempt supplies, this will result in their being partially exempt for VAT purposes, and input tax recovery will be on that basis as outlined below. Now it's there in the next page. Let us go in that. It has been outlined there. Thank you so much.